Hey everybody, welcome to August 20th, 2026 Principal Profit Trader Coaching Call. We're going to take a look at the very exciting Bitcoin chart and we're going to take a look at it objectively. We don't want to be a perma bull and we don't want to be a perma bear. We want to be in sync with what Bitcoin is doing. And to do that, we need to remain objective. And to be objective, we have to apply the system objectively to the market unimpeded by our emotional state. So, as you can see before me, I have a monthly chart and I have a 10-month moving average. I'm going to be looking at this from multiple time frames. This is a very important moving average because breaking above it and holding above it has signified the end of the bear market and the beginning of the bull market. Notice the other day, based on this percentage from this drop to here, it is about 50%, as well as this drop is 50%. And I made a circle here saying that we could be something similar here. We're breaking down and then popping back up into it. Then we could fail around this major resistance area or even a little bit higher as this overshot it. And then we break back down below it for a even larger leg down. Now, that is still my thesis, despite this moving up very strongly and having very strong bullish God candles, or as I like to call them, launching point of directional convictions. But just to be level-headed and just to be objective, we have had very bullish news events, bullish trends in bear markets. It doesn't mean that the bear market is over. Now we're going to go down in time frame. We're going to look at the weekly. This is a very strong candle. We're already up over 15% on the week. Now, granted, we have Friday, Saturday, and Sunday sessions, so it hasn't closed yet. And obviously, if it closed like this, there'd absolutely be no signs of any selling or topping tail, and you'd have a very strong candle that launched us out of here and took out all this data. I just want you to, and there might be just a different way of looking at it. Even though this is a strong move up, it is in the context of a very strong move down, and this strong move down was bigger than it. So just keep that in mind, that as we're coming up into larger time frame resistance, that bigger picture bias of a bear market could take over. Now, we have had, like I've said before, pull ups in bear markets to the yellow 20 moving average have often been shorting opportunities in previous bear markets. You can look at the 2021 22 bear market. We've overshot it a little bit, pulled back, we broke below it, came back up into it. Resistance, a little overshot, resistance, couldn't even get there, resistance, resistance, and resistance. So breaking above it, coming back below it. But even so, there is instances, even in this bear market, where we've broken significantly above it. And then, the key is to hold above it. And more importantly, we have to, if this bull market is in, hold above the 50 moving average on the weekly. That is the final straw in the hat, in my opinion, for me to switch my bias. Notice last bull run, we did penetrate the 20 quite a bit, but it wasn't until we broke the 50, right, that we really signified the end of the bull market, the bear market. You can see back in 2017, 2020 bear market. Right, the 18 bear market. You can see I'm open to this, right? I'm open to this possibility that, 2020 held capitulation. You see how they had the capitulation and the corroborating volume that we just don't have yet? But I am open to the fact that maybe we have a larger counter trend rally that doesn't quite get us to the all-time highs, maybe like 100,000 or something like that. Just like this was almost at the all-time highs. And then we get that leg down that actually breaks us lower. This was pretty close. This is the COVID that brought us down one more time. And then we finally get that market. And, this is years later. So like we cannot not, notice this and just look at the last bear market. We have to look at all these. So, I mean, that's what we're kind of dealing with right now in terms of where we are. We've had this strong weekly candle. We have no signs of any topping tail. We'll look for topping tails at the end of the week. If we don't, then we don't. Then we're likely to go up and test this 50. Now, breaking the 50 and the 82, to me, bull market's on. There's gonna be a larger move up, at least to test 98, 99,000, maybe 100. But as it stands, I just want to calm down from all that because there's major resistance ahead. First, in this multi-year trend line here that we are now approaching, that is held as major resistance, calling pullbacks since 24. In the bull market, they were pullbacks, but in bear markets, they are showing failures of counter trends. Touching this marked the end of the bull market. Then we came back up here into it. We couldn't even get that high into it. We failed again. Then we came back up into it again to the cloud, just underneath this trend line, couldn't get it. And now we've rallied up into it again. You can see here that as price made a lower low, the divergence indicator failed to make a lower low on this end, and that is a bullish divergence. I missed that. That would have been a great trade, and I kind of regret being so sticklerish with my plan that it had to touch the 300 and bottom build like this there. That was a ridiculous notion. When you have a bullish divergence here, I will draw that. And it is significant for a counter trend. But now we're coming up into something that is not just a couple of months, but a couple of years. Okay, so this is significant. Breaking this with conviction is a serious bull sign. Okay, I don't think we are going to break that with conviction. I think we're going to have problems there. Why? Well, I mean, we've come up into here, right? So we've technically made a higher high than here, right? If we draw a line from here to here, it's made a higher high. But price has failed to make a lower low. Okay, so that is a bearish divergence, right? Price is showing strength, but the momentum has made a higher high than where we previously were, but price has failed, right, to do so. So this was like we made a lower low. This failed to make a lower low. Price has failed to make a higher high yet than this one, but the momentum is right there showing that it may not be as strong as you might think. Now, ideally, I'd like this to be overshot a little bit and then this to be not making a higher high. But as it stands, price has not made a higher high, and it kind of does show that it's got a little bit more move. I'm not so concerned about that. I'm concerned about this major resistance that we're going to hit. Okay, that's what I am looking at. Specifically, I'm ignoring, the RSI is confirming the price action. There's nothing really I can say about that. On the weekly here, I'm still very cautious of this up move because of this huge separation between these stochastics here, which it'd be nicer if it was above the 80, but notice it didn't have to be. Even as high as we are now, when there's a separation, this is at the 20. That's what's important. And this is called a sling reversal, but it hasn't reversed yet. But remember, we are not calling things after the fact. We are anticipating things ahead of time. That's why my plan to short at the pink and the 20 was planned ahead of time for a while, but I should have, given the strength of the candlestick pattern category that night when I made a daily call, I should have given that more weight and then backed off the short side because the data was just too strong with that major bullish engulfing candlestick pattern, which should have got a weighted score of ×2 in our probability daily call calculation scale. Okay, so obviously we overshot the cloud. We overshot the 20, but we have overshot it here as well. And we need to, most importantly, stay above it. We can't dip above it and then dip below it, right? That's what's happened in the past, which marked a false breakout pattern. Not quite a hook from extremes or an inverse zero line region. It's kind of just going with price. So I'm ignoring the weekly CCI for now, but I mean, you can't ignore the fact that we are in this major trend line on the momentum indicator and that we have a stochastic sling reversal here. Obviously there are some bullish signals flipping here with the RSI. So there's a contradiction of signal energy, but right? The 50 is the main one on the weekly that we are looking for. We are at the 10-month now. Just to zoom out real quick, which I showed initially, but I just want to show again, we were at this now, right? Breaking this and holding above it would signify the end of it. We'll see what happens. We have to see how this plays out. The end of the month. Daily, obviously looking very strong. But if we look at this downtrend move here, this is just a move into it, which is now covering 61.8% of this larger downtrend move, where sellers could be active again because this is a very strong launching point of directional conviction. It is at the 61.8% golden mean Fibonacci retracement ratio. We have a clear hook from extremes. It's way beyond here. But remember, the start of bull runs, you need this type of strength. It's only when you're predicting a false breakout that this becomes a reversal. So, like I said, it's hard to imagine this being a false breakout. But if we see, by the close of today, a selling tail in here, some type of a topping tail that we could be getting, that could be a sign that we are done. But obviously, we're not getting that at the moment. Good volume on the daily for these launching points. We've made a higher high. The MACD not really making a higher high, but not needing that. RSI confirming that it's an overbought territory. But until the orange goes above the blue, we turn. It's not demonstrating that we're diverging or there's anything of a down move. Obviously, we're going up. So it's just confirming price, and there's no bearish divergence or anything like that. Even from here to here, we have made a higher high, but the RSI has failed to. But it's not lower than that. It's just at the same level. So not great, but nothing overly weak. The volume is out of control at 286%. It's unbelievable. Um, Obviously looking really, really strong. Really strong candles out of here. But like I said, let's be objective here. We have to stick to the plan. Follow, whether you win or lose on a trade. If you followed your system, that's what great traders do. Uh, and like I said, I've drawn this zone way before we even trended up into it, and I had a space for this gap. I explained why in the channel. And of course, we were starting, pretty much for the entire, since 9:30 in the morning. It hasn't done much. I mean, we kind of just went sideways around this area, not really continuing the trend or reversing. So this zone has been an area where there has been some consolidation. So we'll see how this plays out. But obviously yesterday was a very strong trend up day, and then we continue with another trend day today. So there's obviously no short setups today, even though we are at this key reference area of resistance. We need to see a sign of a major double top, very wide. We would like to see a selling tail on the candlestick pattern. You can see on the hourly, we've been making higher highs, but the CCI has not confirmed that. Obviously, we'd like to see that on a higher time frame. Well, hours okay, but 4 hour even better. And it's also confirming that we've made higher highs since yesterday, but we're not really getting the momentum there. I'd say at this point in time, wait for the price action via candlestick pattern to confirm some kind of a selling or topping tail. And that's when you could potentially initiate a short. Now, if this momentum is way stronger and flat out wrong, and Bitcoin's doing something that it's never done in its history, which is break the 4 year cycle, okay, I would need to see that weekly moving average of the 50 break, and then we hold above it. I really don't know what it's going to do. We're closing very strong. So I got to remain objective. It's still early enough to do something, but it could be emotionally tough enough where you're buying right under the 10, where you bought right under the 10 here, when you went from around 70 down to 32. Sound familiar? About half off. We've gone about half off. Then we've had a move that went from around 32 up to 48. Sound familiar? We've had a move that went from about 58 up to 73. So 13, and then this went from 33 up to 49. So 16. So like very similar percentage of this up move, but we're moving right up into the 10-month moving average. No stochastic sling giving a signal then, nothing really here. But they don't know, like not everything is gonna have to fire. So remember, we're looking for a confluence of signals so we get it so we don't become so focused on one cool little thing that we're seeing, one on-chain metric or one bigger picture pattern or one type of indicator. We're looking at a variety of bigger picture patterns, a variety of categories like leg count and price action and volume and see how it gets there, and a variety of indicators to judge the momentum oscillation so that we can get a holistic view of it because that's the best shot we have. Um, and then, the best loser wins. If you can quickly cut your losses like I did this week, you're not going to lose that much. I mean, imagine if I just held that short trade, just thinking it might reverse and, um, went to the margin account, just kept adding more money from my portfolio because I didn't want to take a small loss in front of everybody. That's stupid. My loss yesterday was probably the biggest loss I've had in the last three trades or something. It was like 1.5%. The other one was like 0.6 or something, 0.8. So like I'm following the day trading, swing trading, fixed percent risk model, which is not doubling down. It's not martingale. It's not DCAing. We are cutting our losses very quickly. This is the hardest thing to do in trading. I mean, how many times I know I'm going to lose in trade, and I'm like, oh, I have it at 1.5% or 2% is the max we can use, and I just don't want to cut it shorter, and I walk away because I'm afraid of missing it, even though I know I'm on the wrong side. I'm getting better at cutting them sooner, as you can see that I did in the channel. I cut that short trade before we had that crazy breakout. All the shorts got liquidated, and we had a crazy short squeeze because once we started to break that, I knew to get out. Technically, it was a contextually aligned balanced breakout setup because it broke like 3 or 4 weeks worth of data, even longer. And I could have flipped my bias and went long, but like I said, hindsight's 2020. How you perform in the moment when you don't know the result of what you're going to do, or is influences how you behave. So be careful not to judge yourself with too much hindsight bias, because that's judging yourself now with information that you have now that you didn't have back then. So be easy on yourself with that. At least that's what I'm working on to show up every day. Because it's like, a couple days ago, it looked like this, and then bam. I mean, that easily could have been a move down into this green. I didn't know which way it was going to break out. I really didn't. I didn't see a metric either way, really. Um, Typically, Augusts have been very bearish. So this will be an anomalous August event where we're or not, obviously. Um, we'll see how we close at the end of the month, but I doubt this reverses in a violent fashion. This thing could go much higher. I mean, we broke all this down. We broke the cloud, broke the 20. We might be going right into this 50 before there's any signs of any type of topping. But the most important hurdle that would confirm that we're going to the 50 would be breaking this trend line here. So keep an eye on that. Keep an eye on how this plays out. This is still a sling where we're still down at the 20. We're almost at the 80. So this is a sling. Reversal, but it's obviously not played out. Not everything plays out the way you think it is going to. And not every indicator fires a winning idea all the time. That's what we're searching for when we do this. We're looking for a probability gradient, not any type of predictive certainty on any given particular trade. We have to think in groups of 20 trades, 50 trades, hundreds of trades. And then, and to get to that level of large number participation, where the law of large numbers comes into play, where over the long term it's skill, but over the short term, whether you win or lose is luck, like within 10 trades. So don't give up on yourself. And like I said, a novice trader, don't get overconfident. If your first 10 trades were winning trades, and this is easier than you think because you haven't been in it long enough to see all aspects of this game, to see how you respond when things don't go your way. Because I guarantee you they will not always go your way if your way is I need to be right. I am really training myself with the system holistically to not need to be right, but to follow a positive expectancy strategy and objectively look where we are going. I mean, it would be objectively retarded of me not to notice that we have a God candle right now for Bitcoin, and that potentially, we could be going a lot higher. Maybe this counter trend goes way higher than I thought. So I have to reassess. Once again, not noticing that bullish divergence and taking the double bottom has been very costly because I was psychologically prepared to do that if we penetrated the green 300 moving average, but I just possibly was fine tuning trade location in such a way that I missed it. But nevertheless, I did, I was willing to follow that plan, and I had another plan to short once we got to the 20 in the cloud. But the momentum was too strong, but I still took the short on a double top yesterday and got stopped out for 1.5% loss because I followed my system, and that's what great traders do. That's all we can do, guys. So yeah, I mean, I wish a few more people were on the call. Then we could take a look at a couple different things. Um, I wanted to talk about silver and gold. I mean, I'm potentially seeing a topping pattern here. I know everyone thinks this was gold's bear market, which I also called, I'm sorry, silver. I also told everyone to sell up here as well, saving you guys a huge amount of money. 120 something down to 50. I mean, incredible amount of money I say to everybody with that call. And, I know everyone wanted me to give a reload here. This is potentially, like I said, I think this is still a counter trend. We have a crazy sling here, reversal. We have an inverse zero line reject. We are popping back up into a 50 moving average that is held as support for the entirety of gold, a silver's bull run. And this is the same exact context for gold. We have broken the 50. We spent a lot of time below it. And now we're coming up into both the 50 and the 20, where I think what's going to happen is that this is going to hold here, and this 50 is going to roll up higher, and this 20 is going to roll on down, and we're going to get a death cross pattern where the 50, the slower one, crosses above the faster one, the 20. Notice we had a golden cross, the inverse of that during the bull market, where the yellow was on top of the blue, right? Because the yellow is the faster one. And golden cross is the faster one over the slower one. Death cross is the slower one over the faster one, which looks like this is good. That's what's going to happen. We're about to have a death cross. I mean, I don't think gold's going to get higher. Silver's going to get higher than the cloud here. We have a trend line as well, and you can see gold as well. I mean, keep in mind, I don't, I'm not holding any physical silver anymore. I was, so I don't look at these charts. This is a member request from Mr. John Burgess. Same thing with gold. I mean, we're coming up here. This is a counter trend rally in a bear market. This move is smaller than that move. We are still under the cloud, and we have a sling reversal setup. So, granted, we did break the 50 here, so maybe that is letting me know something. But this cloud held for the entirety of gold's bull, and we broke above it. Spent time below it, so it's definitely going to act as resistance on first test. Like I said, I think we could be the gold and silver could be in for a top. That's my that's what I'm seeing. And we'll just go on a smaller time frame to wrap it up. Yeah, I mean, you know, once we broke this clear range extreme high, we were in a now a balanced breakout pattern. That's why I had this zone backed up way up high. I thought that I saw that when I took the short into the next day. I didn't short that during the trend day. I shorted it into the overnight, thinking that we may be a little exhausted and we it was making a top pattern. And it was basically because we moved right up into the weekly 20. And we've always gotten a reaction there. This time we didn't. Even the time that we broke it last time, if you look at the first time we touched it, it produced a selling tail candlestick pattern that particular week, and then the following week we broke it, and it was a significant move down. So that's why I took that short. Obviously, I'm backing off. Once it broke that, I didn't take any other shorts or anything like that. Wasn't excited about going long because there was a major resistance up ahead, and the move kind of already happened. I felt, and I didn't think the risk reward ratio was quite there yet. So yeah, I mean, a really strong move. Bummer I didn't catch that. Like I said, I'm just going to try to get better. Forgive myself for my mistakes and what I'm going through. I was kind of burnt out over the weekend. There was this move on Sunday that I saw because we were bottoming, 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 bottoming. We had this huge confluence zone right above our micro bull bear, and I probably should have took that long, and I didn't. So it's been a little difficult for me to go long. I've missed a lot of counter trends. You can see out of my last whatever trades that I have recorded here on this chart for the last couple of weeks, blues are shorts and greens are long. So I mean, I'm clearly uh, short biased, and I have to be more neutral, I sense, because we're getting exhausted, obviously, to the downside, as evidenced by this move that we've had. Huge move up. So anyway, oh, I was going to end it, but I just want to look at a few key metrics. Little view of the channel here. Under tools and tricks, I want us to go to this chart. To the Bitcoin MVRZ score. Typically, it's been useful to call capitulations for tops and bottoms, blow off tops, blow off bottoms. Um, a couple things in Bitcoin's entire history that we've seen happen every time there's been a bottom. Every time there's been a bottom, the market cap dips below the realized cap. In other words, the black line, right, dips below the blue line. You can see here in the last top that we had, 22, you can see that it spent some time and dipped quite a bit below. Black dip below the blue. See the last bull run, black dip below blue. COVID, black dip below blue. Bear market, black dip below blue, mark the bottom of that, black dip below blue. And on top of black dipping below blue, the Z score, right, penetrates deeply within the green range here. And we have not penetrated within the green range, meaning it hasn't dipped below zero to mark negative territory for extreme fear and capitulation. And like I said, I've explained to you what this MRV score is. You can obviously come here and read the indicator overview, how to use it. I've added a few things to it as well. I just wanted to point out that see how this top see now, like I said, going into the green marks the bottoms, but the higher we go on the other side, it marks the tops. You can see here this top and this top had an extreme Z score of around 7. Trying to get into this pink box here, you can see this top here, the 18 top, very extreme yellow Z score went all the way up to 10. You can see this all-time high. We had a very high extreme yellow Z score. Those called the tops. But as you can see, not every top in Bitcoin's history, for example, we had this top before the COVID, that wasn't a blow off top, has to be a blow off top. We did not have a blow off top this time. Notice the Z score couldn't even get above 4, when as before it got, into that pink box every time. So we're getting diminishing returns on the upside. And notice that we do not need to have a blow off top to mark a top. And this is because, like I said before, the cryptocurrency market during this last bull run had more coins created than there were customers to buy the slop. Absolute complete saturation of cryptocurrency scams and dog shit. Okay. I fucking hate altcoins. If you were hyping me up about altcoins a year and a half ago and your name's my brother, fuck you. Okay. I forgive you, but fuck you. Okay. From the bottom of my heart, you're an idiot when it comes to this shit. Moving on. Um, but notice that for the on the other side, conversely, on the other side, for the Bitcoin bottoms, every single time it did need to have a capitulation where the Z score got below zero into the green box. Are we close? Yes. I mean, could this be the first time where we get close, but we don't get into the green box? We get close to the black going over the blue and then we don't? I guess, but I need to see evidence of that by breaking the 50 and holding above it on the weekly time frame and breaking above the 10 month on the monthly time frame and holding above it. Until we do those two things, I have to say that this is still a very strong counter trend rally in a still bull market. I need to see very strong evidence that disputes the 4-year thesis. The 4-year thesis is still valid. I'm sorry if I'm seeming like a perma more than a moon boy here, but like I said, just data wise, I'm showing you this on train metric. This is the MRVZ score, MVRVZ score. I also showed you the Puel score. God, I forget where it was. It was that Puel thing. The Puel thing is also showing how miners and another bottom on chain metric. I'm using the price action of the charts with the underlying momentum indicators, as well as these on chain metrics to try to time the bottom. And we are not there yet, according to this chart. That is a fact, despite how bullish this move up seems. Yeah, just a Puel score. Yeah, you see, the Puel score also hasn't reached the green box. When the line drops into the green zone and the Puel multiple, it marks a capitulation phase. It means miner revenues are dangerously low. Miners are barely breaking even or are losing money. Weak miners go bankrupt and shut off their machines. Historically, this extreme pain indicates that Bitcoin's market price has hit an absolute bottom, making it an outsized buying opportunity. We just haven't had that happen. We're above the green score. We haven't had the vertical volume capitulation that every bear market bottom has had. We are early in the 4-year cycle. I would say it has to be fourth quarter. Thank you, MK Matt here. Yeah, I got out early on this short here when I shorted this trend line uh, right here. Okay. There's a hook from extremes as well. I mean, whatever. They don't always work. I mean, it's trading. You got to get out quick. Don't think about it too much. Exiting for a small loss. Lose the best loser wins, right? No need for a full stop. Okay, so right, reassessing, very strong up move, breaking things that I didn't think would break as quickly. But guys, I don't want just everyone just ape into this move after we've had a huge extension. Let's see how we close tonight. More importantly, let's see how the weekly candle closes on this Sunday night. Okay. If we see any signs of any kind of selling tail or topping tail, if we close back underneath the 20 in the pink, well, then this move may not be as strong as we had imagined. Now, on this Bybit spot, we have breaking this multi-year trend line, which is very scary for bears. But if you go to this index here, we have not broken it. So the index takes in a little bit more data. I don't know which one you want to use. Bybit, they broke it. Let's take a look at Coinbase. Yeah, I mean we've made a higher high, uh, but we this indicator has basically failed to make a higher high. It's at the same price, so it's a bearish divergence. A little bit better here. So very, very strong looking sling on this Coinbase weekly here, but let's just see how we do it with these closes. That's what the daily call recess everything. Obviously, this candle is very, very convincing and strong and kind of mitigates this candle. Remember, we had this strong move down and this strong move up. We got to see how it plays out. That's the best thing I can say for now. Remain objective. We know we'll invalidate the bear market thesis that we have going for our top two scenarios, right? Once we break and hold above this 50 moving average, then I say, okay, well, maybe we're in for a bigger rally and, it's doing something that's never done before. I'm open to that if the evidence suggests that we're going to do that. But until then, I think aping it now could potentially be another dead cat bounce, a false breakout where you will be, the exit liquidity of spot. Remember, the moves yesterday that largely pushed us higher was a short squeeze, and it was futures traders that were selling. I was part of that crowd that got stopped out. But today, when we had another trend update, when I checked the on-train metrics, it was not being moved by spot like it was yesterday, which overpowered the shorts on the futures. Today, who was buying were the futures guys again. Traders were buying again. And spot was selling. And that doesn't give me much confidence. I want spot to be doing all the buying in a bear market bottom transition to a bull. I don't want to see back and forth. I mean, yesterday, when spot was buying, the bulls won. Today, the traders on futures were buying and they still won out. But still, with spot now selling more than they were yesterday, does that make us really that confident? Just a small little 2-day thing, but something to take note of. So I'm glad we checked out the Puel score. Obviously, we're closing really strong. We are about 2.5 hours from the market close, and we will be checking in with you again in about 2 hours for a daily call. Take care, everybody. Over and out.